The USD to INR exchange rate is currently hitting historic highs, sitting at over 94 rupees. It is almost the highest it has ever been. For expats and non-resident Indians sending capital to family or into Indian investments, this creates a highly lucrative window to maximize the value of your dollars. The default move for most people is to simply use their primary legacy bank. It is convenient to keep your checking, savings, and international transfers housed inside one familiar app. But here's the dilemma. You look at the record high rate on Google, you hit send on your banking app, and the actual rupee amount that lands in the destination account ends up being noticeably lower than you calculated. Traditional banks aggressively market zero-fee transfers, but that zero-fee label is a carefully constructed illusion designed to mask the true cost of the transaction. This chart visualizes exactly where your money goes. Banks hide their cost in the red zone underneath the curve, known as the spread. On a $1,000 transfer, you lose roughly 3,700 rupees. If moving $10,000, that invisible tax scales up punishingly. Specialized fintech platforms exist specifically to bypass this legacy banking ecosystem and completely eliminate that hidden spread. The choice between a traditional bank and a dedicated fintech app is a strict mathematical trade-off. You are weighing default convenience against capital preservation. One dedicated fintech alternative explicitly built to strip out this traditional bank markup is Aspora. This comparison matrix breaks down their core mechanical advantage. Instead of applying a proprietary bank rate, Aspora processes transfers using the live Google rate. As a result, 100% of your converted capital successfully reaches the destination account in India without shrinkage. To secure that rate, you have to accept the required input trade-off. You must leave your unified banking app, download a third-party service, and completely set up a new account. Accepting this friction is critical if you are executing high-volume deposits into an NRE account, where protecting the principal is your absolute priority. If your goal is maximum capital protection, accepting the initial setup friction of a new application is mathematically required. These platforms still charge for their service. After your first 3 free transfers, Aspora charges a flat $3 fee per transaction. This dual bar chart compares a static $3 flat fee against a typical scaling 3% bank spread. As soon as you move past $100, the $3 flat fee becomes vastly cheaper. However, this illustrates an inverse risk. If you are a microsender moving exactly $50, a $3 flat fee is mathematically punishing. It equates to a massive 6% tax on your capital. But for optimizers sending thousands of dollars, the flat fee model is highly lucrative. It effectively caps your transfer costs regardless of volume. Flat fee structures are not universally better. They only reward users who transfer sums large enough to dilute that upfront cost. The final metric to evaluate is transaction speed and recipient liquidity. The standard for traditional international bank wires often involves holding your funds in transit for 3 to 5 business days. Looking back at the matrix, we can contrast that legacy delay with Aspora's infrastructure, which completes the transfer in 30 minutes. If you are covering a family medical emergency or paying time-sensitive bills in India, avoiding 3 extra days of transit time removes severe logistical friction. Fintech apps solve the liquidity delay, turning slow cross-border transfers into near-instant domestic-style payments. To decide which system mathematically fits your specific transfer habits, follow this decision tree flowchart. Trace the first path for the microsender, making infrequent transfers under $100. Microsenders should stick to their traditional bank. Avoiding the $3 flat fee and the app setup friction outweighs the minimal amount of rupees lost to the spread. Now trace the second path for the optimizer. This is a user executing high-volume transfers, funding NRE accounts, or requiring 30-minute liquidity. Optimizers must switch to a service like Aspora. The combination of a flat fee and live Google rates is the only way to avoid that 2 to 4% invisible tax. There is no perfect remittance system, only the correct mathematical model for your specific volume and urgency. Voluntarily ignoring the math means leaving thousands of rupees on the table over the course of a year. If you fit the optimizer profile, you must stop losing money on the bank spread today. Start sending money to India at unbeatable Google rates using Aspora. When you sign up, use the referral code 7RKESI to get £50 for free plus 0 transfer fees on your transaction. Maximizing your capital requires stepping outside the default banking ecosystem. Make the switch.